afternoon, ladies and gentlemen. We get into the last half an hour of today's market wheel on Market Today at Business Today Television. Good afternoon, a very warm welcome. This is your host, Shail Bhatnagar. Well, there is a bout of mild profit booking in many indices, but the Nifty continues to be strong. 23,700 thereabouts is still with the bulls, 33 points higher. 618 points higher. The top performing index today is the IT index, up about 1.65%. Mild green tick on the Nifty Financial Services Index, primarily on because of Bajaj Twins. But overall, the theme remains buy on dip, and that's working very well on the 7th day of this fantastic rally. Advanced decline is now favoring bears, but that's only to be expected after this very sharp run up that we've seen in the previous 5-8 trading sessions. 587 shares are in the green versus 1900 that are in the red. Amongst notable winners today, you have the infrastructure space doing pretty well. So steel electrode makers, HEG and Graphite India are the top winners today. 12% higher on HEG and 8% higher on Graphite India. You have a sprinkling of pharma shares doing very well. Sanofi India 4.3% higher at 6,095. A strong move that is coming on counters such as Thermax, UltraTech Cement. UltraTech Cement and cement counters such as JK Cement, India Cement, Ambuja Cement are all in top form. Let's get a market view in. Mr. Neeraj Diwan, independent market expert, joins us on the show. Namaste Neeraj ji. What a day to welcome you. A strong move in the markets over the last 6-7 trading sessions. Tell me, how do you feel? Is this smile genuine? Are you really happy to see this nice green tick in the market? We've had terrible 5 months.
Yeah, good afternoon. Thank you so much for having me on the show. Yes, actually, last time when I was on your show, it was I think somewhere in mid-February or third week of February. That time there was a lot of doom and gloom on the markets, and we were below 23,000, and markets were drifting on a daily basis. So I think that what you and me discussed and what our view was very clear. This is a market where one, after the correction, should be buying on dips. So that played out very well. The market came down close to 22,000. And, kind of stocks we discussed also would have done very well post that correction. So now if you compare this market to what happened in November, December also, after seeing 23,200 around, the market sharply bounced to by 1,500, 1,600 points in about 10, 15 days. And then it came back all the way down to 22,000. So I want to smile and keep on smiling, and keeping this view in mind that this time maybe it is different. We may not see the market coming down all the way like it did in after December. So that's what the thesis is, that this time maybe it is just the run which has started after making a strong bottom at 22,000, and you will see this volatile days, some correction, and market will slowly be constructive and give reward to long-term investors.
Neeraj ji, I so agree with the sentiment that you present to our audience. We've had pain from September till February, and even all of February and the initial part of March. It was terrible to see at the price destruction that was happening regularly. Many good stocks were losing 5, 7, 10% regularly on a daily basis, and that was actually hurting not just sentiment, but people's faith and hope in equity markets. Now that all that is behind us, let's take this discussion forward. You are a value buyer, which essentially means, ladies and gentlemen, that Neeraj ji only looks at where you can make 30 paisa on 1 rupee. That the stock has been beaten down so badly कि अब यहाँ से चलना ही अति आवश्यक है. So Neeraj ji, in the last 7-8 days or maybe in the last 15 days, have you been shopping? What have you purchased?
Like we discussed last time, we had listed some stocks which I was looking at. So that time I was looking at stocks like Garware High Tech, Films, EIH Hotels, there was Surya Roshni, Mazgaon Docs. These are the kind of stocks we're looking at, and even in the pharma stocks like Divi's Lab, Senores. These are the kind of stock which we were discussing at that time, and which we had bought on the dips when the market was close to 22,000, 22,300 kind of levels. So now that these stocks have given some return, so some of those stocks will still be in that value buying zone. But then, now you need to look at stocks even after the run up, may not have contributed that much and still looks interesting. So I think the focus now is more on domestic focused stock. So even if you have this tariff threats coming your way in early April, you don't know what sector can get impacted, but purely stocks which are dependent on domestic economy, domestic consumption, are the ones which I'm looking at right now. Like the broader themes would be infrastructure, like water infrastructure. Then there'll be our banking space, PSU stocks. Then there would be your railway stocks, which earlier was everyone's darling, but now no one is really looking at them because they, after the run up that they saw, they crashed also badly. So these are the kind of sectors which one should be looking at, and even power as a sector should do well because we are coming into the summer season where the power demand will go up, and a lot of power stocks have corrected a lot, and they were consolidating right from I think last May June. They not even in the May June to that September rally, they also didn't contribute that much. So those are also the ones which one should be looking at.
Okay, fair point. Both of us are from North India, Delhi specifically, and summer has come in early. Any view that you would have on maybe power producers, NTPC, maybe Tata Power, and more importantly, Neeraj, Coal India. No matter who produces power, coal will come only from one company.
Yeah, absolutely. So Coal India also are the stock which we had accumulated in the dips, and right now also after the small run up, it's seen from 350, 360 to close to 400. It's a good buy, and looking at the demand which is going to go up for them. So Coal India, besides that, Tata Power is another one which I'm looking, but Tata Power had corrected and from those levels. So Tata Power can be another one which even for a medium-term investor, according to my understanding, can give at least a 20% return in the next 1 year. So this Tata Power is another one. Besides this, I'm looking at renewable energy also. There are stocks like JSW Energy, GIPCL, which are into renewable energy. So those stocks also are on my radar. Plus, there's RPG Group stocks, CESC, which should also do well, which had also corrected. So that's also now in decent valuation. So these are the kind of stocks I'm looking at in the power space.
Okay, fair point. So from our discussion, I gather, Neeraj, that you are only interested in large caps at this point of time.
No, not really. See, I am actually a person who would mostly invest in mid-cap stocks. See, but I would say that one should have a diversified portfolio. You should have the major portion definitely has to be large caps, but mid and small caps are the one which will really give you that extra return that you're looking at generating. If you're looking at generating 15% return, you will stay at large caps over the long term. They will give you that kind of return. But if you're looking at going a little more than that, then you have to have mid and small cap. Like some of the stocks which I mentioned, GIPCL would be a mid cap kind of a company. So I would be looking at a mix of small cap, large cap, and mid cap for the quality of company, and the balance sheet is the most important thing that I look at.
Okay, fine. Neeraj, we've seen a lot of enthusiasm coming in for erstwhile favorites, ICICI Bank. Look at Kotak, is at a record high, and it's just come out of the blue by doing nothing in the last 4.5, 5 years. Do you have hope that this rate cut cycle will improve for the better? and that private sector banks have more legs in terms of the rally?
Yeah, the private sector banks like Kotak Bank or HDFC Bank had outperformed. They've been outperforming for some time now. So they may continue doing well, but I would say that though private sector banks will definitely be part of the rally, but I feel that more return, better return can be made in some of the PSU banks. Because there you not see that rally, and plus they may in the initial phase they may suffer a bit, but then over the next 6 to 9 months, if there are a couple of more rate cuts, they are the ones who will be more. They will be getting more benefit. And I think if you look at even the State Bank, even State Bank, which is the largest of the lot, and you go down to stocks like PNB, Union Bank, in the last couple of quarters, they've also shown decent results. And their balance sheets are also quite strong now. So I would feel that
Yes.
you may get better return from the PSU banks than the private sector banks after the run up that you already seen in the private sector banks.
Okay, fair point. So you retain your fondness for old world public sector banks. Neeraj, one thing that has also happened is that uh, wealth management companies and stocks associated with the financialization of assets, brokers, mutual fund service providers, depositories like CDSL, all of them have come substantially off their highs, and of course, given the regulatory oversight that brokers such as you face, volume has also now come down. Is this story over, or are you looking at an opportunity to get into some stocks because of this very sharp dip? What is your view here?
Yeah, I don't think the story is over because I feel that even the budget, that tax cut that happened, the money which is going to come into people's hands because of the tax benefits, some of them will also come into the financial markets because that is where you are getting better return. So I would be stock specific there. I like asset management companies like a Nippon, or companies like CAMS, which are doing the registration and services for mutual funds. So these are the kind of companies I feel that should be looked at because you saw CAMS and Nippon Asset Management also correcting a lot. So among the lot, these two are my favorites, which I feel is a good long-term investment and should be good if one is investing for at least 1.5 to 2 years.
Okay, fair point. What are the two or three things that make Nippon AMC a worthwhile investment?
Yeah. See, basically, if you see the schemes also, because I invest in mutual funds and I've been, even advise people who ask for mutual fund investment. They have a lot of schemes which fall under top three, four, in most of the, and they have been growing and they have been giving very good return. So a lot of money chases when the scheme is doing better. And as far as the due diligence is concerned or the compliance is concerned, they are top quality now with the Japanese management, and plus they have a mix of compliance
Fair point.
with
Fair point.
people who are already there with them, which have been from Reliance Mutual Fund days. Some of them are still stuck onto them. So they have a good pedigree of fund managers, plus they are a good fund size and their performance has been very good.
Okay, ladies and gentlemen, let's just look at NAM India. What Nippon Asset Management is already is known as in the listed space. So the most recent high on NAM India was somewhere like 800 rupees that we saw in December of 2024, and from then on it slipped all the way back to about 500 rupees, 506 rupees in March, and from 506 there have been 2 nice weeks of uptrend. The stock is now above 600 or so. So this is something that Neeraj ji likes. There are other wealth management stocks that are doing well, at least today. Anand Rathi is at 1852 and it has gone up by 2 percentage points. But remember, Anand Rathi was at a very recent high of about 222 to 2000 2,200, and this is of course a split price, so you can well imagine the level of correction here as well. Neeraj, what about stocks like Hudco, Ireda, Ircon, RVNL? These were erstwhile trader favorites. They've come back into some kind of reckoning in the last 3 or 4 sessions. Is this a dead cat bounce, or is there some merit in this long trade?
And this segment, like Hutco, of course, has been a favorite. Plus, you name some of the railway stocks. There, one has to be very stock specific. See, earlier when we saw the rally in these stocks, it happened across the board. If you name a railway stock, it was moving. You name something in, affordable housing, it was moving without seeing the valuation. So I feel that one needs to be very stock specific there. In the railway space, I like stocks like Texmaco Rail, because I've been following the results. The first 3 quarters of this year has been tremendously good for them, and they have a good order book, so they should continue doing well over the next year also. So and even stocks like RailTel, which have a niche, railway telecom, signaling that segment, and they also have a good order book and order flow still coming to them. So I am more stock specific here, and purely where I see valuation comfort, I'll be advising on entering into those stocks.
Okay, so RailTel, you have a valuation comfort. That's heartening to note. Let's see what the all-time high of RailTel was. I remember 650. Okay, yes, 618, and this was on 12th of July 2024. Actually, railway stocks and many other PSUs had corrected much before the broader market started to correct in September, and once September came in, the correction on these stocks became all the more deeper. So at 227, when this stock was at on 18th of March, right? Yes, at 277, this price was last seen in 27th December 2023. So from 277, it went all the way up to 600, and from then on, you have this sideways to weak correction that is there. 317, Neeraj. What are you telling your long only clients, people who buy for the long term and are passive holders of equity? This downturn is a wonderful opportunity for them to add quality stocks at reasonable valuations. On behalf of your clients, what are the 3 or 4 major stocks that you have added?
See, besides the mid-cap, some of the mid-cap stocks that we discussed in the power segment, the water infrastructure segment, in the large cap space, I like non-ferrous stocks like Vedanta, Hindustan Copper. I feel that Vedanta, because of if someone is a long-term investor, he's going to get the benefit of the demerger. So if he's investing for the next couple of years, he'll get that benefit. He'll get those 5 companies, and he can ride that up move in that the combined valuation will get. And Hindustan Copper is another company which so much is getting invested into copper. They recently signed some agreement with JSW Energy for copper mine, where they're going to get next 6-7 years of income, 2,400 crores or something. So non-ferrous space is one where I've been recommending investing. Plus, even in the FMCG space, the pure FMCG companies like Hindustan Lever or Britannia or ITC, they've also corrected a lot. The Hindustan Lever, the last quarter was not that good, but the correction has also been very sharp. The stock came all the way down from 3,000, 3,100 levels towards 2,100, 2,200 kind of a level. So Hindustan Lever is one in that category. Britannia has corrected a lot. And with inflation coming down, and there's a possibility that inflation could keep trending down for some time. These stocks will also benefit the raw material prices going down for them. So these plus ITC, even if you see the demerger of ITC Hotel, we were not expecting ITC to come down to these kind of 400 kind of level after the demerger. So these stocks also we've been adding for a long-term investor.
Okay, so these are old boring names. We often discuss ki इसमें क्या बनेगा, ब्लू चिप में तो कोई रिटर्न ही नहीं आता. बट if you are able to buy ITC at the right point of time when it is crying out in pain, then often 15, 20, 30% returns are seen on a annual 1 year basis. One one thread that has not worked in this rally so far is IT. Neeraj ji, any hopes that you have from frontline and mid-cap IT stocks? Where do you think value lies? Are you buying this massive underperformance?
Actually, till now, no. I've been avoiding IT. Now, but at this level, though in the last couple of days it has moved up a bit, but just before that also, now it reached a stage where one should be looking at opportunities to buy, but not really started buying IT or recommending IT. But from these levels, it doesn't make sense to sell, even if you have been holding them for a long term as a long-term investor. I don't think these are levels to sell IT stocks, whether it's large cap or some of the mid cap IT space stocks also. I think now, if getting any dips from these levels, one should look at opportunities there rather than selling at these levels.
नीरज जी, व्हाट आर यू इग्नोरिंग कंप्लीटली? क्या ऐसा है जो बिल्कुल ही मतलब ऐसा लगता है कि इससे दूर ही रहा जाए?
Basically, till now, like I mentioned, IT had been ignoring till now, so which still not really started buying. So this was one which, and among the pharma space also, I'm very selective. I'm only API is one space where I'm positive or where I'm investing or recommending. Otherwise, not really going for pharma because I feel that there's still uncertainty about what's going to happen as far as tariffs are concerned there. And so that is also another space where I'm very, very selective. And generally, if there's something which has, you know, your export element involved, where things like some auto ancillaries, which have a presence, which have been exporting to US. So these also I've been little careful about it.
And Neeraj ji, in all this mayhem, Bajaj Finance is at a record high. ICICI Finance is at ICICI Bank is at a record high. SRF is at a record high, and Chambal, you trade quite a lot, I know, are at record highs. Anything you like in this space which you might want to chase momentum? I know you are not a momentum chaser, but any dip that you would want to buy on these or four stocks?
Actually, I'll not be buying these stocks after the run-up. So I think like you said, that we always chase value where we feel that there is valuation comfort and where we feel that you can get that extra return, the market beating return you can get. So, but among the fertilizer stocks, I think there's like GSFC, which is trading at a very, very good valuation. It is trading at, I think, 11, 12 times, something like that. So GSFC can be one which can be looked at for a long-term investor. It can give a good return. So among the private sector banks, specifically, if you look at the smaller ones like a Karur Vyasa or something like a Karnataka Bank, I think there that valuation comfort is very strong. Karnataka Bank, if you see, is trading at, I think, 0.5, zero point 0.6, price to book. So that's a very, very attractive valuation for someone who wants to invest for a long term.
Okay. लेकिन नीरज जी, isn't there a fear that you might be in a value trap, especially Karnataka Bank? I mean, you and I have done nearly 35 years of markets. It has always been the bridesmaid, never the bride. हर वक्त बात होती है कि अब बिक जाएगा, ये क्वार्टर में तो डील पक्की है, लेकिन वो डील कभी हुई नहीं. बट आई गेट योर पॉइंट. इट्स करेक्टेड फ्रॉम 285 टू 178, 180. So yes, there is value to be had in a stock that was already deeply undervalued, but probably that's a value trap.
See, I've been following this stock, so around 185 kind of level is where we started recommending or buying this stock. And even if in the sharp fall that we saw, it didn't fall too much. I think it always stayed between 170, 180 kind of a level. It, you know, that is, so it stopped falling now, even after the bad news that is there in the market, the selling that we saw across the board. This stock is now trying and holding on to these levels. So I feel that these levels, maybe in the shorter term, one can go wrong. You may not get that kind of return. But over medium to long term, evaluation will always play some part, and the stock will give you decent return from these levels.
Okay, okay. So, from what I gather, Tata Power, Coal India, Karnataka Bank, GSFC is what you prefer in this level of the market.
Yeah, they can still be
Any
bought.
names that I've missed?
They can still be bought at these. No, I had mentioned some of the railway stocks like Tex Macro Rail also, which I feel that last
Yes.
first 3 quarters are good for them. So valuation wise, again, that stock can give a decent return because now valuation is also attractive. So this is also another one which I had mentioned.
Okay, Tex Rail has corrected from 240 to 140. So, ladies and gentlemen, these are opportunities that only bull markets, when they correct fairly rapidly, give. So, please keep 5 or 6 stock, and of course, NAM India. You mentioned NAM India as well,
Yeah, absolutely.
which is now at 603.5. So, please, yes. So, these are the 5, 6 stocks that I will record against your name. And Neeraj, thank you so much. What a pleasure. And let's hope we meet in person soon. एक कप चाय ड्यू है आपके साथ.
Sure, sir. Most welcome. Look forward. Thank you so much for having me on the show.
Okay. Thank you so much for your time, sir.
Thank you, sir.
Have a nice evening, sir.
Same to you,
Thank
sir.
you.
Thank you.
That was, ladies and gentlemen, Mr. Neeraj Diwan. He is a wonderful watcher of the market and only shops in the value phase, which is when stocks correct 30, 40, 50%. He steps into and very quietly keeps on accumulating very good counters, and once they give 30, 35, 25, 35% a return a year, he exits with about 80-90% quantity. The stocks he suggested at current levels are Tata Power, Coal India, NAM India, which is Nippon Asset Management, GSFC, Tex Rail. Again, you have to consult your independent financial advisor if you want to buy these stocks at beaten down levels. With this, ladies and gentlemen, we'll call it a day and start wrapping up the markets. After 6 days of relentless rally, the market pauses for a bit of breath. 23,613 is what you see on the Nifty, down 44 points. Today's intraday high was somewhere like 23,805. Let me just recheck this and again inform you. Today's high was 23,870. So from 870 to 608, it's a 260 point correction intraday, which is fine because the market actually rallied 1700 points from the low of March 3rd on the Nifty and 4100 points from the low of March 3rd on the Bank Nifty. Today's hero has been the IT index, something that we had discussed early morning. So sectoral rotation is happening. Money is moving into IT, money is moving into cement, money is moving into select pharma. That is the state of play as far as markets are concerned. Advanced decline is now negative, but for the last 6 days, it was fairly positive. People are taking away money from the market, the initial profit that they've made in the last 4 or 5 days, but till Thursday, when the March FNO expiry ends, one presumes that short covering will be the trend as far as bears are concerned. and that value buying and bottom fishing will continue from the part of DII investors. We'll leave it at that, ladies and gentlemen. 23,600 on the Nifty, down 52 points, 51,470 on the Bank Nifty, down 233 points. IT index up 350, which is the outlier today, and profit booking in NSE 500, 100, 200, mid-cap and small-cap indices as well. Thank you so much for your time. Tomorrow morning we meet again. Have a nice evening.
Days after the Karnataka Assembly passed a bill providing Muslim quota in government contracts, the battle over reservation has reached